Further ado, we bring in the Scott with a lot, Fraser McLeod from Shaw and Partners, live from Adelaide. Sorry about that, Fraser. I'm not sure what was going on there with the other prompter, but no, welcome to AusBiz. What do you make of the performance we've seen today? Started off weak and just basically crawled up higher, then looks like a little bit of selling towards the close.
Yeah, I mean, if you look at this, I suppose, very beginning, very end, then it doesn't look like a lot happened, but probably a lot of paddling in between. So, yeah, you look at ultimately, this is a market when I looked at it over the course of the last 10 days. Market hasn't really changed that much, but it has been fairly choppy. So, look, on our view, we always try and look a good 12 months ahead, and it's not great value, this market. There's a bit of value there, but perhaps not the most exciting as of right now. I think a lot of investors are just playing a pretty much nothing game at the moment. They're just waiting for the U.S. election, and the tactic that they're waiting on is one of these sort of hold, and that's it. Just see what happens. Hopefully Biden would win. Many investors would say. But it's hard to have a lot of conviction over the polls because of what happened last time around.
Yeah, I mean, it's just an ongoing conversation, isn't it? We're all sort of waiting to see the result just as much as the next guy. We were talking about Oz Minerals just a moment ago with its quarterly update. Are you of the view, such as your colleague James Garish, I don't want to pitch you guys against each other, that this has become a very well-run company poised to take advantage of all that the prices have to offer?
Yeah, well, James Garish was here in Adelaide last week. I believe he rode a postal bike all the way across South Australia for charity, so good on him.
Oh, wow.
And he did visit our office, unlike Scotty, who I believe was in Adelaide last week and did not visit our office. I did notice that on his Twitter account. Anyway, the decarbonisation bull market is certainly playing into the hands of Oz Minerals. So yeah, I would most definitely agree on Oz, and that is our house view. Oz Minerals has done an incredibly good job over the years, really over the past 5 years, between 2010, say, or 2009 and 2015. Every result that came along, every production guidance that came along, they just didn't meet their targets at all. But really, so they messed up a lot in the first 5 years of the last decade. But throughout 2015 to 2020, the management just deliver every time. So it wasn't, 10 years ago, if you talked about Prominent Hill, Prominent Hill was meant to be a dead asset here in South Australia by today, and now that it's got well over 10 years that's still to go. That's proven. Carpentina as well was really meant to be a difficult asset in order to manage, but it's firing on all cylinders. And so I think you can see a very well run, managed company in a copper producer in Oz Minerals. It's got some gold credits as well, which help them out. But you can see the difference between, say, an Oz Minerals and Antofagasta, which has had some real production problems. Many in a COVID environment, many copper companies have had production problems. So production going really well with Oz Minerals. We like it a lot for the decarbonisation theme that's just going to continue over future years.
Yeah, and it hit a 9-year high in today's session. So one to watch.
Incredible, yeah, amazing bounce back since March.
So Fraser, I was going to go and get your views on China now, out talking about decarbonising its economy by 2060. Now, if it follows through with that, there's going to have massive ramifications when it comes to the listed universe here on the ASX. In an environment such as that, what's the kind of company that you'd go and pick out number one to go and hold or buy when it comes to positioning for a less carbon intensive China?
Look, I think there's plenty that you could look at, and copper, we were just talking about Oz Minerals, and copper is not a bad place to be looking because, just to recap what's happened over the course of the last few months. So China, which is the world's second biggest economy and really the biggest producer or the biggest polluter rather, it said that they are, surprisingly, that they would be carbon neutral by 2060, which seems like such a long way away. However, it's having a big investment impact today. Now, the European Union has also done pretty much the same thing. Their target is a lot further ahead. It's saying in 2050. And we even had Joe Biden saying that he would have a $2 trillion stimulus package based around green infrastructure. So tick, tick, tick there. You know that the environment is changing. And for some commodities like copper, the amount of copper that's going to be needed in an electric car is 3 times the amount of copper that's used in a traditional manufacture of a petrol vehicle. The amount of copper that's used is enormous that needs to be used for these wind turbines to actually connect them to the grid. There is no alternative commodity other than copper that can be used for that. So we're very comfortable in something like OZ Minerals. We were even speaking to Ian Purdy this morning. Now, he's the managing director of Paladin. I've spoken about some of these uranium plays before, but it's interesting to really just to get his view. And a lot of these uranium plays, they talk about the macro picture and it's jammed tomorrow, the contracts will come eventually, and they will. But looking at the big picture, it's if China was to take its carbon neutral target seriously, then China alone would be using all of the yellow cake that's produced in the world each year annually, just that one country. So the amount of the change that these green infrastructure long-term plans have to become carbon neutral is going to have a massive impact directly on some companies, some positive, and also some companies are obviously going to suffer as well. So most of the uranium producers, if you're a country that produces uranium, you usually produce around 20% of your power from uranium, and China only produces around 5%. So there's massive step ups to come in some areas around copper and uranium and a few other commodities, and there's also perhaps maybe some massive step downs to come in the old world, very damaging, heavy carbon polluting industries as well.
So do you go running away from coal like a house on fire?
Yeah. I think so. There'll be traders who will say there's a trade to be had there when things get really cheap and on bounce backs. But ultimately, it's hard to in the long term to be very positive on the likes of something like a New Hope. So a lot of met coal producers are still going to be in demand, and there's a difference between the quality and the actual product itself. Not all coal is the same. So the difference between obviously met coal that's used to manufacture iron ore and or used to manufacture steel with iron ore is very different in terms of quality and grade than the bulk horrible polluting stuff that's burnt every day in order to produce energy in the form of thermal coal. But if you look back on, say, something like a thermal coal producer like New Hope, 10 years ago they were worth $6 a share. 2 years ago they were worth $4 a share, and today what are they worth? They're worth just over $1. So
yeah.
It's even BHP threw in the towel on their just a couple of months ago. I think back in August it was that they threw in the towel on the thermal coal, and they did it not because they weren't making money necessarily. They could still make a buck from it, but they did it just simply from investor pressure. So yeah, we're finding even us as advisors, we're finding that it is a factor now. Investors do care about where they're going to be positioning new money, and so the environment does matter in terms of making investment decisions, and that comes all the way from retail investors and all the way up to sovereign wealth funds as well, who are just excluding carbon. So I think you're going to get pressure in both areas, really, from investors saying no, we're not doing it, and also consumers saying we're not doing it, and from regulators just really around the world who are trying to reach their carbon neutral targets saying we just can't do it. So big impacts to come. It is going to be a long term, but a lot of these big long term themes, they happen slowly and then all at once.
Fast, yeah.
Fraser McLeod from Shaw Partners, thank you as always for joining us here this afternoon, and enjoy the rest of your day.
Good. We'll see you in Adelaide one day soon, Scotty.
Trust me, Fraser, next time I'm in town, I'll definitely go and hook you up.